Hello everyone, welcome to today's video. In this video, we will discuss the 9 best Fidelity index funds to buy for retirement. So this is an article that was fairly recently published by US News. So I came across this article because quite recently I was having a conversation with a family friend of mine where I was asked where someone can park their money for retirement and what would be some of the funds to look into and so on and so forth. So that kind of led me into this research, and I think this is a good starting point for anyone considering buying index funds for retirement, because a lot of people are buying index funds these days. Now, before we get started, please keep in mind I am not a financial advisor and no information in this video or on my channel should be considered as financial advice. Neither am I affiliated with Fidelity or US News in any way. With that being said, let's dive right into it. So they say these are the best performing Fidelity funds for retirement over the past decade. Recent stock market volatility probably has your investments pretty shaken up. So shaken up, your portfolio may look nothing like you originally intended, which is why this is the best time to rebalance your retirement portfolio. While many of the following funds have been the best performing over the past 10 years as of February 29th, many are down about 20% year to date. Meanwhile, the Fidelity Long-Term Treasury Bond Index Fund is up 21% year to date. This is where your opportunity to rebalance lies. Sell your appreciated bond funds to buy more of these beaten down equity funds while they're on sale. And they also leave a little note where they say you may or may not have access to these in your company plan. If you don't, all of them are available in individual retirement accounts or IRAs. Now guys, you'll see that this was published in March 31st, 2020. So this was right after the stock market took a huge dip. So if we take a look at the S&P 500 index, you'll see, so we're looking at the 1-year chart. So you'll see right here from the top to the bottom, which was on March 23rd. Let's see how much of a dip it took. From the top to the bottom, it was about 34%. So that's a huge drawdown, and we usually don't see such big drawdowns in the stock market. This is not a common occurrence, at least in my experience. So it's understandable why they released this article and the volatility that they're talking about. So let's dive right into it. Let us look at fund number 9. So fund number 9 is Fidelity OTC Portfolio, and here is the ticker symbol, FOCPX. This 5-star Morningstar rated fund is among the best performing large growth Fidelity funds in the past decade. The Fidelity over-the-counter fund invests more than 80% of its portfolio in stocks trading in the Nasdaq index or over-the-counter markets. OTC markets have more small and medium-sized companies, which generally offer more growth opportunities. That explains the high returns of this fund, but it also means the fund comes with more risk. Add the lower transparency and regulation on OTC markets, it's easy to see why FOCPX gets a high risk rating. Investors should also note the fund's top 10 holdings account for nearly 44% of the overall portfolio, which is in turn nearly 45% invested in the tech sector. High performing this one may be, but highly diversified it is not. From my experience, guys, as we stand today, tech stocks have produced the greatest returns, but have also been the most volatile. You'll see here the 10-year average annual return is almost 17%, which in my opinion is nothing to sneeze at. The expense ratio is 0.89%, which compared to the 17% return is almost nothing if you ask me. And here it says, in terms of risk, high versus US large growth category. So let's move on to fund number 8. Fund number 8 is Fidelity Blue Chip Growth Fund, FBGRX. It's not easy to find blue chip companies with big growth potentials. Giants can only grow so much bigger after all, but this is exactly what the managers of FBGRX aim to do. This blue chip large growth fund targets companies in the S&P 500 and Dow Jones Industrial Average and companies with at least $1 billion in market cap. From those criteria, management selects only companies it feels offer above average growth potential. Bear in mind that this means the fund is heavily invested in tech, almost 38% of its entire portfolio, and consumer discretionary, almost 22%. It also carries a lot of weight, more than 43% in its top 10 holdings, which includes common names like Apple, Google, and Amazon. This one has a 10-year average return of 15.66% and an expense ratio of 0.8%. And risk-wise, it's above average versus US large growth category. Moving on to fund number 7. This is Fidelity Nasdaq Composite Index Fund. The ticker is FNCMX. If you favor index funds, the best performing Fidelity fund for your retirement is FNCMX. The fund aims to track the performance of the Nasdaq, which includes more than 3,000 stocks. FNCMX holds 2,065 of them. As with FOCPX, it's heavily weighted towards information technology, but then so is the US economy. And this one has less weight in IT than the Nasdaq Composite, which is 33.66% versus 41.55%. FNCMX also carries a lot of weight in its top 10 holdings, which include familiar names like Apple, Amazon, Microsoft. So when FNCMX is another high performer, order this one with a side of diversification for a less volatile retirement. Also note that for an index fund, this is on the expensive side at 0.3%. So as you guys can see, guys, this one had a 10-year average return of about 15.5% with an expense ratio of 0.3. Also above average risk, as you can see, as it's mentioned here. So if you guys want to do your own research on this, you could click on the ticker here on the page and it would bring you to another page where it has more details on it. You could see the chart and everything else, and you could see the performance, what it has done. You do have an interactive chart. You could see the cost and fees associated with that and all the details of this. And also what you could do is you could just copy this ticker symbol right here. For this, we see FNCMX. You could just go to Google and search for that ticker symbol and you will see Google's results on that. So you could see the chart, the details, the name, and you could see how it has done in 1 year, in 5 years. And you could also obviously do more research right here in Google Finance, and this is very, very detailed. So me personally, I like to do my research in Google, or since we're talking about Fidelity funds, the Fidelity website themselves. So as you will see, the first link that shows up here would lead you directly to Fidelity's own page. You could follow Fidelity's page, which will have the most up-to-date information and the most detailed information as well. So once again, the performance and the risks. A lot of details. The details of the ratings as well. You could see the summary of the rating over here. Here, the details, the composition, which I think is very important. The fees and the distribution. I know a lot of people tend to care about that. Me personally, I'm not a big fan of bargain hunting when it comes to expense ratios. some people would fight me on this, but everyone's different. I'm not saying one is better than the other. So here you could find all the details of the expense ratios and some more details. So guys, all this information is available on Fidelity, or if you want to do some research on Google or Google Finance, these details are available for all these funds we are discussing in this video today. So with that being said, let's move on to the next fund. The next one is Fidelity 500 Index Fund, FSKAX. So this is offered by more than 14,000 of the 23,000 401k plan on Fidelity's platform, according to the company, making it one of the most accessible Fidelity funds for retirement. It also happens to be among the best performing Fidelity funds for retirement, with a 10-year return of 12.64% as of February 29th. It has taken a beating, however, down almost 24% year to date, which could signal a buying opportunity. With a tidy expense ratio of 0.015%, the Fidelity 500 Index Fund is one of the lowest cost funds of the 10 best performing Fidelity funds for retirement. Formerly FUSEX, the fund replicates the S&P 500, making it a nice option for index investors or those looking for a large blend exposure. And here you'll see, guys, the 10-year average return is 12.64%, really low expense ratio of only 0.015%. That's less than 2%. And the risk is also average versus the US large blend category. So moving on to the next fund. Fidelity Total Market Index Fund. The ticker symbol is FSKAX. Fidelity's Total Market Index Fund provides exposure to a broader swath of US stock market than the S&P 500. With more than 3,400 holdings, FSKAX reaches far beyond the S&P 500. No single company makes up for more than 4% of the overall portfolio. For broad stock market exposure at index fund pricing, FSKAX is definitely one of the best performing Fidelity funds for retirement. That said, Fidelity's recently debuted Zero Total Market Index Fund, the ticker symbol is FZROX, accomplishes the same thing with no expense ratio. It has also outperformed this fund since 2018. When the new Zero Expense Ratio Fund was debuted, you likely won't find the zero funds in your 401k, as most providers wait until the funds are at least 3 years old before adding them. But FZROX is available in any Fidelity IRA. Once again, guys, the 10-year annual returns is 12.46%, really low expense ratio of less than 2%, and average risk. And guys, seems like if you're someone who likes to be really diversified even within the fund itself, this is a very good fund for that, as no single company makes up for more than 4% of the overall portfolio of the fund. So definitely worth looking at. All right, so fund number 4, Fidelity Growth Strategies Fund, FDEGX. Moving from the large cap category into the mid caps now, which generally target companies between $2 and $10 billion in market cap, this is the best performing mid cap fund. While it focuses on medium-sized companies, the fund may invest in small or large companies as well, provided the managers believe they offer the potential for accelerated revenue or earnings growth. FDEGX currently has more large caps than mid caps in its portfolio, with its top 10 holdings being well over the 10 billion market cap mark. That said, they aren't your usual suspects. Names like Global Payments, Fiserv, and KLA Corp don't make the top 10 of many, if any, large cap funds. So 10-year average return is around 12%, about 0.5% in expense ratio, and about average risk as well. So guys, so far we've kind of looked into the OTC fund, which is really small cap or penny stocks kind of fund. Then we looked at really large cap ones like the S&P 500 companies and the large tech companies. This one is somewhere in the middle. This is like the mid cap fund. So if that's what you're looking for, there you go. So moving on to fund number 3, Fidelity Extended Market Index Fund. The ticker is FSMAX. Another popular fund in Fidelity 401k plans is the Fidelity Extended Market Index Fund. Benchmarked to the Dow Jones US Completion Total Stock Market Index, which excludes companies in the S&P 500, FSMAX can be a good source of small and mid-cap stock exposure and a nice complement to a large cap or S&P 500 fund. FSMAX is also highly diversified among those smaller companies with more than 3,100 holdings, the top 10 of which account for only 5.4% of the portfolio and the representation in every market sector. So guys, this is a highly diversified fund. So if you want to be diversified within a fund, this is your jam. If you like the sound of this fund, now could be the time to buy, as it's down more than 30% year to date. Now, guys, I don't know how this fund is doing at the moment, as when they say 30% down year to date, they were talking in March 31st of 2020. So you'll have to do your own research on where this stands and if it makes any sense. But let's take a quick glance to see where it's at right now. Yes, so right at the end of March, it took a huge dip, but now it's even past its previous highs, as you can see. So this is no longer low at the moment, as it was, like they said, down 30% or so. This is definitely past that point, but something worth looking into. The 10-year average annual return is close to 12%. Pretty low expense ratio of 0.045%, but the risk is above average, so keep that in mind. All right, so the next fund is Fidelity Real Estate Investment Portfolio, FRESX. If you want to add real estate to your retirement portfolio, the best performing Fidelity real estate fund in the past decade is FRESX. The fund aims for capital growth with above average income and a yield more than that of the S&P 500. It's managing to do that, but barely, with a yield of 2.62% versus closer to 2% on the S&P 500 funds like FSKAX. It invests primarily in the common stock of companies in the real estate industry or engaged in real estate investing, with the bulk being industrial and offices or residential. Over half of the portfolio's assets are in its top 10 holdings, but then with only 44 companies in its entire portfolio, that's not surprising. 10-year returns, a little over 11%. Expense ratio, in my opinion, slightly on the higher side, about 0.74%, and average risk versus US real estate category. So guys, I know a lot of people want to have real estate on their portfolio, but if you think about the cost of adding like physical real estate to your portfolio, as in buying a house or a condo or an apartment, it can be expensive. And at the same time, it also can be very cumbersome to maintain. A lot of variables come into play, like getting a tenant or natural calamities, etc., etc. Many different factors come into play. But if you're investing in a real estate fund such as this FRESX, you don't have to worry about those factors, and you could get in for very little cost. As far as I know, all Fidelity funds have no minimum, so you could invest as little as $10 or something like that. I don't think you can buy a house or an apartment or any physical real estate or an actual property for that kind of money. So this is something worth looking at, in my opinion. All right, so before we reveal fund number one, just a friendly reminder, guys, no information in this channel or in this video is financial advice. I'm not a financial advisor. This is an article I found. I thought this is a good and interesting article, so I thought I'd share with you all. I will also link this article itself in this video, so you guys can do your own research, check it out, and actually check out the source of this video. I'm not saying to buy or sell any of these funds in any way, but I do think this is a good starting point to do your own research. And as always, guys, if you guys have any question regarding what we discussed in this video, feel free to leave that in the comment section below. I'll do my best to get back to you. And if you like contents like this, you might want to consider subscribing to this channel as we discuss about personal finance, investing, trading, credit cards, anything with a dollar sign, we talk about it in this channel. With that being said, let's see what's the last fund. It's Fidelity Balanced Fund, FBALX. For a less aggressive approach to retirement investing, consider the Fidelity Balanced Fund, FBALX, invests about 40% of its portfolio in fixed income securities like bonds. Right now, it's just less than 30% in fixed income, which explains why Morningstar gives it a high risk rating compared with the 50 to 70% asset allocation category average. Its fixed income is primarily investment-grade credit, U.S. Treasuries, and mortgage pass-through securities. With this more conservative approach to investing comes a more conservative return. This rounded out the past decade with a 9.56% average annual return, so FBALX is more of a best performing Fidelity fund for semi-conservative retirement investors. So guys, since this is semi-conservative, I would say this could be a good choice for people who are approaching retirement or getting closer to retirement. Could be something for them to take a look into. Or if you just have a lower risk tolerance, if you're risk averse, there's nothing wrong with that. We all have different styles of investing. So if you're one of those individuals, this could be something worth researching. That said, it's a 5-star fund from Morningstar and earned a score of 8.7 out of 10 from US News and World Report. And guys, here you'll see the 10 years average return is about 10%, a little shy of that. Net expense ratio is, I would say, fund-wise, a little on the higher side, about 0.5%, and the risk is high, like we discussed. So guys, that would be all the funds, and in the next slide, you would have a list of all the funds we discussed in this video, along with the URLs where they take you to US News's own research page for these funds, all of the ones that we discussed today. I personally like to go to Google, where you could just search the ticker on Google and it would bring you to this page. And when you click on more about that fund, you click on that and it takes you to Google Finance, and that's where you see the information that Google Finance provides for that particular fund. Or you could just go to Fidelity and check out Fidelity's information of these funds, because these funds are made by Fidelity themselves. Seems like the sensible thing to do, since it's their fund, they would have the latest and the most detailed information. So guys, that's it for this video. Give it a thumbs up if you like contents like this. Once again, if you have any questions, feel free to leave that in the comment section below. And that's it for this video. I will catch you guys in the next one. Bye-bye.